Okay, well, we've got the total here.
30 by November.
January 2025. If you only keep doing what you're doing right now, saving, you'll have 33K. And
Yeah,
we wanted the goal to be 30K here.
yeah.
So,
Earn
which
more
means
money
that we need to make $6,000 from trading,
from trading. Yeah,
which would be amazing.
yeah, that'd be cool.
Because the moment you're profitable on demo, it's time to infuse emotion into it, right? And actually use really profitable demo month. And the goal is then to following month have a profitable real month. So we've got 6 weeks in order for us to figure out your strategy and get it right. Just having this up here will help us to create a strategy so that we can get you to a profitable month and also know how much you need each month in order for us to hit the goal of 30K. The 6-figure income means that we need to have 5K or at least 3.5K actually.
3.5, I think. Yeah.
Yeah, we need 3.5 from trading a certain
Each
month. And so that would be, if that's the case, then this one is where it needs to be, right?
Yeah.
But it was July 1st, so we need to actually have it here. So it would be better to look at it from this perspective, for example.
Mm-hmm.
Even if it's just a little bit.
$100. Yeah.
Yeah, bro, if you're $100, you're making $100 in November, bro. That's massive. Like, you should be like, holy crap, bro.
Yeah.
Because the fact that you actually make a profitable month just a few months after starting your learning is like, that just shows that long term you can make millions.
Yeah. Yeah. There was a thing I did see on Brandon Carter's video where it said 10,000. Oh, I've got it on my computer. I'll send it in Telegram.
You can show it to me.
He had like a skill level thing, and it said if you do something for an hour a day, it'll hour a day, 2 hours a day, 3 hours a day, 4 hours a day, and the skill level next to it, which I thought was pretty cool to look at.
Is that like how much better you are than normal people or something?
That's just how to master a skill. So then if 100 hours, you're not bad at it. 1,000 hours, you're good. And it'll take you 1.3 hours if you do it 2 hours a day to be good at any skill, really.
Dang.
What that was showing, which I thought that was pretty cool to look at.
There you have it. There you have it. So we're basically looking at in 1 month, you'll be not bad at it.
Yeah. Yeah,
Right.
pretty much. Yeah.
That's actually pretty cool when you think about it. So you'll be a good trader. Wait, hold on.
Good trader in 1 year, and then a really good trader in 2 years for the 3 hours a day. But then I'd probably increase it to 4 hours a day eventually.
Yep, that's part of the plan. At least that's what I'm gunning for. Because which is going to be a bitch, obviously.
Yeah.
But to be a good trader in 8 months from now, so let's say September, October, November, December, boom. So in May, you're a good trader if we up it to 4 hours a day at the end of the month or whatever we get to.
Yeah.
So actually, I really like that one. Thanks for sending it. I'll actually save it. You can actually you can put it on the
Men High Value channel.
The group chat.
Yeah.
That would freaking dope. Boom.
Yeah, I thought it might have been a limitation of the Google Sheets, but there you go. Works. So December 77 should.
77.1.
Yeah, it's a massive difference. What was it, 33K to 77?
I mean, and this is assuming that you're gonna keep your full-time job.
Yeah.
Right? Which you are.
Yeah, I'm not gonna retire or leave my job anytime soon.
So this is in line with your goals. You're fired up and excited about it, from what I understand. In Nick's way.
Yeah.
And
I've got my reasons to be rich now.
Yep, you sure do. And at what point do you quit your job, by the way? Is it when you make 10K from trading?
Don't know. I think I'd keep it for a while until it gets in the way of trading and stuff like that. But it's not the worst job to have because I can just work from anywhere and I can just go on holiday and use my annual leave and work for a couple of hours or something and then trade for a couple of hours and then do whatever. So
boom, there you go. Cool. So what the next thing that I wanted to talk about was what type of trader you want to be. I've asked you that question before, but you've got a little bit more overview now since last time we discussed it. And so there is four types of different traders. We've spoken about this before. We got day traders. We've got the swing trader, and then we've got Crypto Career University calls them hybrid trader, and then the long-term investor. And the difference between these four is that the day trader, what he uses is that he ends all trades at the end of the workday.
Yeah.
Basically means that he does not trade overnight. He just wants to go in and out of trades, and he's on the 1 minute, the 5 minute, and 15-minute chart only. He doesn't look at the longer time frames, and he uses volume. That's his biggest indicator to see what are people doing right now, what is the volume, etc., etc. That's his biggest technical analysis tool. And then you've got the swing trader, which holds for a few days to maybe 1 to 2 weeks.
You're right. That's a long trade.
That's a long trade, but that means that it's a long trade. And that's a pretty good strategy. Actually, most people end up doing that because it's a stress-free lifestyle. If you are right the majority of the time and you only have to put in your trade, you've done a lot of research, you basically just spend all of your time researching instead of going in and out of trades. You spend a lot of time researching, and then you put in your trade, and then you let it go.
Yeah, it seems like the way to go.
Right.
Day trading sounds stressful.
It is stressful. And a lot of what I know from Crypto Career University, we'll just call him Steve.
Yeah.
What Steve says is that that's the worst thing that anyone should do if they're just starting out. So he says, like, if you have $250,000 to invest in trading and you've been trading consistently for 5 to 7 years and you know what you're doing and you're profitable, maybe that's the time to be a day trader.
Yeah.
But pro tip, it's not for you. Now, I personally don't take that advice because I like the day trading. I like the in and out. I like the percentage chart that I showed you. If I do 1% per day, 2% per day, 3% per day. And because I'm using leverage, it's actually possible, but it also puts my trading portfolio at risk every day.
Yeah.
And it is kind of stressful, and it's very difficult to be consistently long-term profitable and keep it sustainable because you'll have off days, and those off days will strip you of everything that you've built over the past days and weeks and months. If you're emotional, right? But obviously, if you can do it non-emotionally, then it's a perfect system. But yeah, less stressful to do swing trading. And then you've got hybrid trading, which is his system. And that's basically that you keep it for a few weeks to a few months.
Oh, yeah. Far out.
That's a long trade. And that is based on the ups and downs of the crypto market. Because the crypto market doesn't go up and down in a few days and weeks. It's like weeks and months before things, go up and down. It's kind of the pace of the crypto market. And you get to participate on all swings that the crypto market has. And then you got long-term investor who basically join in from, early on and then waits to the bull market, sells at the top, and then he waits to the bear market, buys at the bottom, waits until the bull market to sell. Like that's the more of a long-term investor. And then you got those that's a long-term trader, to be honest. And then you have a long-term investor who just buys and holds and doesn't want to think about anything. I'm going to accumulate Bitcoin over time. That's all I care about. So me personally, I kind of want to I haven't started this yet, but over time, I want to have my day trading portfolio, whether it's that $20 that I start with and I just build it up over time just because I love it and it's fun.
Yeah, that'd be fun.
And then having your kind of your crypto stash that is more a hybrid type of, like Steve. So after my discourse, well, what are your thoughts? Have you changed your mindset? Do you want to stay away from the stressful lifestyle of a day trader? What are you thinking?
They all sound enticing. I think day trading sounds fun if you're only putting like little amount in. Swing trading sounds alright day trading sounds alright if you're just bored and want to do something, but that's the wrong mindset to have, really. Swing trading sounds probably the better one, and then using those profits to hold on something, buy into something that you think is a good project that's cheap, and that's my thought process anyway. Using the profits to buy other assets to make more money.
Right. Exactly. Perfect. So that's what we'll end up doing then. You'll the day trading that you do will just be the fun part of leverage trading.
Yep.
But with very little money.
Yep.
And we'll make sure that that's always the case.
Very little.
With accountability, you can actually hold yourself, to it. You know what I mean?
Yep.
If you're on your own, it's a very dangerous strategy because you'll sometimes be looking at your account and you'll be like, I could put that in there and I could make some money. And it's like, no, that's not where I want to go.
Separate accounts just for that occasion.
Yeah, that's not okay. There you go. All right. So which one do we start with first? Because that's the question. According to Emperor BTC, he says that you should start with the 1 minute chart.
Oh, really?
Emperor BTC is completely different than Steve. They have two completely different type of mindsets, two different type of trading strategies, and both are mega successful, right? Now, Emperor BTC, what he does is he wants you to understand the charts and understand your emotions and learn very, very quickly. And so he puts you on the 1 minute chart so that you can understand what the candles do the vast majority of the time. So that you basically see and experience and things are happening a bit quicker. Because on a 1 day chart, this is what Steve says, you should only study the 1 day chart. Only until you master that, don't do anything else. And that's nice and probably a good way to stay profitable and to not ever use leverage, etc., etc. But the problem that I see with the only sticking to the 1 day chart is that there's nothing going on. You have to wait a freaking whole day for one candle to change. And so yeah, what are your thoughts in terms of how you would like to study it?
I like the 1 hour chart, honestly. It's the one I've been looking at the most.
Okay, there you go. So the 1 hour chart is a mix.
Yeah.
Literally, it's the middle ground between 1 minute and 1 day. So let's start there then. And so whenever you say that you are in a trade, it is based off the 1 hour chart.
1 hour chart. Yep.
Is that correct?
Mm-hmm.
All right, perfect. Then the next question is, do you have a proven and tested strategy that you enjoy?
Not yet.
There you go.
I've been using a couple of different things.
Yep.
Some of them throw indicators out that they're going up and then it goes down or something. So
that's the ASAP. That's kind of the same thing as, when we were trying to figure out your niche. It's actually kind of fascinating to think about that you've only been with me for a month. We started out, you have no idea what to do. You have no idea what type of business. And then we very quickly found you, okay, trading, all right, fine, we'll do trading. And then now suddenly we've come to the next ASAP thing that we need to get to, just like finding a niche was needed to be found ASAP. The next thing is finding a strategy for your niche or finding a strategy for your trading that you stick to, and it's a proven and tested strategy that we can rely on. And then we don't change the strategy until we actually change it. Like you only make trades with that strategy until we find out, because of our journaling, how much it gives us and if it's profitable, losses, etc., right? And we don't, like, you can study other strategies but never make trades with them until you change, you know what, I'm going to switch from this strategy and go over to this strategy now and only use this one strategy. Does that make sense?
Yeah, that makes sense.
Because in that way, you don't diversify. It's like you have a focused approach of, I'm only doing this strategy for a period of time. Maybe it's 20 trades. This is what's recommended. Just stick to that strategy. 20 trades. Let's see, did it work? Did I stick to my strategy? Yes, no. If I did, then that counts as one of the 20. And what happened? Did I make money? Did I lose money at the end of the month?
Yeah.
Or at
makes
the end
sense.
of the trades? All right, so let's look at, you can put a horizontal line on, for example, what we're trying to find is 35 or less. So 35 on the RSI. Let's start at the RSI first.
So can you put these lines on there?
Yeah, you can also put control and H, I believe.
So 35.
On 35. Boom.
Buy, and then we'll make it a red color.
Excellent.
That's what I want to do. Sure.
Perfect. So there was one time on the hourly candle that you had a good buy. I mean, a great buy. Can you find it? Boom. There you go. Amazing.
At 12:30 in the morning.
Right? But look at it though. How beautiful was it?
Yeah.
Was it a good buy? Was it a great buy? There you go. Okay, so let's look at the confluence. Let's look at the stochastic RSI now. We needed to find one below 20.
Below
so 20. You need to put a line for 20. It's actually already there, right? It's already there, but you can have it. Okay, so we're trying to find confluence. Confluence is when multiple indicators are saying the same thing, right? So if the stochastic RSI is saying great buy, and what is a great buy? Below 20, okay? So you first look at the RSI, it needs to be below 35. We only find one time that has happened. Now we need to take that specific time at 12:30 a.m., like you said.
Yep.
Not that one, but that one. Yep, correct. You go down and look at the stochastic RSI. Is it below 20?
It's at 2 point something, I think. 1, 2. Yeah, whatever that is. 2.
Is it
3.
below 20?
Yeah. Definitely below 20.
Definitely below 20. Okay. So what is that? It's confluence.
Mm-hmm.
It's confluence. And it was a great buy. That's confirmed. You literally have back tested it at least one time now and looked at that strategy, and it was a good one. Okay. So now it's very important with this strategy that you waited until the blue line crossed above the red line, because that stochastic RSI is a momentum indicator. So it basically shows the momentum is going to go up now once the blue crosses over the red. And then it's the opposite when it's at the top, right? So the moment the blue crossed the red and it's still showing us a great buy, that's a fantastic strategy for entering a trade. So the cool part about your 10x leverage is that you could have a 10x leverage on this one, and your liquidation would be at like 22K or something, 24K. Like, it's very not likely that it would go down to 22K, right? Plus you have a stop loss below a certain level. I don't know where we would have put a stop loss, but it needed to be quite low so that you didn't get stopped out before it went up, right?
Yeah.
So maybe a good stop loss here would have been 28,500.
Up here somewhere.
No, because you wanted to have a buy. Right? So it needed to be 28,500. Then you would have been in the clear. So that would have been a few hundred away. Now the question is, when do you sell? We wrote RSI needs to be at 80. So let's put a horizontal line there. You definitely would have been able to get a good sell there, right? So that's the question that you have to go through if you're going to stick to specific rules. I mean, with this one, you could have been a great buy and then have a good sell. Yeah. Right? I mean, that combo works. You were profitable. You made money, and you would have, with 10x leverage, you could have gotten pretty good sum from them, right? Yeah. So this is an example of a strategy. I think it would be wise for you to start with this one.
Yeah, I think it's pretty simple to understand as well, which I think is good to start with.
And let's see where we go from there.